Good afternoon, everyone. This is Justin Hewlett from Vini Wealth Management. Thanks so much for tuning in today. In this video, I want to spend a little time and provide a demonstration on how to enter your information into your RightCapital profile. So by now you've got a RightCapital email from me that says you have an account and begin the financial planning process with us here at Vini Wealth Management. And I get a lot of questions from people that ask me, what information do you need? Some, how do you enter it? And then why is it important? This information is important to me to develop the best financial analysis I can that is pertinent to your financial situation. So the better accuracy we have on the data on the input, the better my output will be. So that's why I want to spend a little time today telling you what exact information I need to provide the best output for you. So this is your home screen. When you receive your first email from me that asks you to log in, this is what you will get. And it asks you for 6 separate pieces of data, which I'm going to explain in detail on what information do I need in there. But the first page asks for your personal data. So I've already started the process with Steve and Sarah Saver. And Steve put his name, his last name in. You enter your birth date, your state of residence, and then your planning horizon. Now it defaults to 90, and that's what I tell most people. If you have longevity in your family, you might want to put it to 95. If you wanted to see what it would look like if you lived at 95, 100, you could change that. I typically will keep that at 90. So once you enter your information, you can put your middle name in there if you wish to, but at least we would need your first and last name. You'd hit the save button. For co-client, I have Sarah Saver, Steve's spouse. She entered her birthday, 10/17/1970, and a planning horizon of 90 as well. And then you click save. Now, let's pretend that Steve and Sarah have 2 children. So what you would do, you'd add participant, child, and then put your child's name in. And their first child is named Scott. They really like S's in this family here. Last name was Saver. And Scott's birthday, let's pretend, is November 3rd of 2002. That makes Scott 19 years old. They have another child, and that will be Susie Saver. Again, really liking those S's. And Susie's birthday is the 28th of April 2005. So once you enter all that information, you have you and your spouse, you and your partner, and children if possible. You could add anybody else if you had a grandchild living with you. If you had anybody else, a relative, a friend, you could put them in there if you wanted them part of your analysis. Once you have everybody in your family entered in, or everybody pertinent to your financial plan, you would hit next. Next it asks for income. And this is the part where I get a few questions on. Are they asking for simply salary? Do you want bonuses? I would tell you to put anything that you can count on a year-by-year basis. So let's say for Steve, I've made a salary of $58,000, and that's where you'd put your yearly amount. And remember, this is the amount you want to add in before taxes. So not what you get hitting your paycheck that hits your pocket, what actually is your gross before taxes, before your 401k, before any other deductions. And then here's where you enter a little bit of the data that's more pertinent to you. So if this owner is Steve, you'd say income I already started. That's what Steve's already making. Income ends at Steve's retirement, which we will talk about here in a minute. The annual increase. You might know your job that says, yeah, you get a 1% increase a year. Or you know what, I haven't got an increase in a few years. Let's put that at 0% or 2%. And I'll say for planning purposes, I always choose to be a little more conservative. I say let's make this a 1% increase each year. Same thing for Sarah. She would put her annual amount in, and let's say Sarah has an income of $72,000 per year. She's currently making it. It ends at her retirement, and the same thing, her income or increase is going to be 1% per year. Now here's one that I get quite a few questions on is how do you enter your Social Security income? Now if you're still in your working years, how the system operates is if you picked a filing age, so you said I want to take it at 65, or if I want to take it at my full retirement age, which for somebody Steve's age is 67 years old, you can change it to whatever age you want. If you said 70 years old, which is the latest you could start taking Social Security, the system will calculate the Social Security benefit you will receive. Now here's the tricky part. Let's pretend that for a handful of years you weren't making as much money and then you received a big bonus or a big increase in pay. The system thinks you've been making that big increase your entire working years, so it might artificially inflate your Social Security benefit. So that's something to be very careful about. How you can mitigate that is if you went to this line item that says estimated benefit amount, you could actually enter your earnings for as far back as you quite honestly can remember, for quite a few years, which then will calculate your actual benefit. So if you in 2015 were making $25,000, you could enter that, and the following year you made 30 perhaps. And then all of a sudden, then Steve got the big increase to now he was making 52,000, and then it went up all the way to 58, which he's making now. Again, that's something you could put in to make sure your number is more accurate. For today's purpose, I'm going to say, you know what, he's just continuing to make 58,000, and Sarah's will do the same exact thing. Here's where you would add in any other income that you might receive. If you have any other self-employment, you do any side work, if you have a pension from a previous job, if you have any other annuity benefits or a distribution, or any other child support, alimony, you would enter that information here, and the system will calculate how it's taxed and what are the ramifications to your income stream as you go forward. So you want to make sure to be as accurate as possible in this section here, entering your income, because depending on what you put here will kick out a different tax benefit or tax pro and con, which would either inhibit or help me in giving you advice. So let's pretend for today, Steve and Sarah, they have these salaries, and it's based on their Social Security is going to be based on these amounts, and we will go to next. The savings tab is where you would put in any savings you're doing that comes out of your pocket. So I said in this instance, let's say Steve is putting 16% into his 401k. Again, his last name is Saver, so that means he's doing pretty good. And he's already started this. His match on his 401k, let's say he gets 100% match up to 3%. If you got a secondary match or maybe a profit sharing benefit, that's what you'd put in here when it says flat dollar match. If they said, yeah, we'll put in $1,000 for you, or so on and so forth. If you by any chance were self-employed, you'd click this button here. And that way it would calculate your benefit a little bit different, and what percent as far as the taxes you pay would be calculated a little bit differently as well. So let's say 16%, you're getting your match, you hit save. Sarah's 401k, we'll say 15%. But let's say Sarah does not receive a match. Her company does not give her a match. You'd put 0 in there. And then you want to make sure it says a percentage of salary or income. There are a handful of people I work with that put a flat dollar amount into their 401k. They might put $250 per pay, and therefore you could put the dollar amount up here. Most people have a percentage of their salary, and it's already started, and that ends at Sarah's retirement. Again, this is something that you could fiddle with if you wanted to. You might say, you know what, I'm going to do this for a handful of years, but within a few years of retirement, I'm going to increase that. Or I'm going to stop that once I realize that maybe I don't need to save as much. For the most part, you probably put it at your retirement, but you have the ability to save that or put it in any manner you want. Now, this right here is where it gets a little tricky. You could add any other saving you want to do. So if you're putting money into a Roth IRA, perhaps, if you're putting money into a 529 plan, a taxable position, and this is where I get a lot of confusion. This isn't where you put money into your savings account from your paycheck, and then at the end of the month there's just a little bit of money left over, let's say $500 that you didn't spend, and you said, yep, we're saving $500. The system assumes that you're taking $500 out and putting it into a taxable account, not just leaving it in your checking or savings account. And then any other savings you might be doing, profit sharing, stock purchase plans, any other tax deferred or tax free benefits, savings bonds perhaps, a pension. So you can add any savings that you're doing that comes out of your pocket or out of your paycheck. Again, very important, because that is it gives me a good understanding of where the money is heading each month. So again, on this one, let's put that Steve is putting $200 a month, or $2,400 for the year, into a taxable savings account, like a mutual fund type account or a stock trade account, that's taxable, which means it's liquid money. And let's say it's jointly held, so it's a joint taxable. They put an annual dollar amount, and it ends when Steve's retired. You could say, I want to increase that 1% per year. You can change that as much as you want, but let's say for today's purposes, we're saving $200 each month into a taxable bucket of money. So you'd hit save. And then from there, you would look and say, am I doing the other savings either on a monthly or annual basis? If no, you would click the next button, and go to the next section here. And this is the one that is the most important. This is where you actually add your current accounts to your profile. There's two ways to do it. The one that is probably a little bit more work up front but provides the best benefit down the line is where you link your accounts. And linking account is where you click this and hit the button that says aggregation. And what you do when you aggregate is you go to the websites that you monitor and you track for your various accounts, whether it's your 401k, your bank account, your mortgage, whatever the case might be. If you have a stock trade account, your mortgage or your home equity loan, you would go to those various accounts and enter your username and password and authorize a link set up between them and your RightCapital profile here. So if you had a TD Ameritrade account with $20,000 in it that had a few stocks that you like to play with, you would link that up so it would show up in this account. The benefit of that is it's monitored and uploaded on a daily basis. So myself as the advisor can look at what your accounts you have, even your 401k, what your mortgage looks like, any other accounts you might possess, and I can see the balance of those on a day-to-day basis, which gives me updated values and monitors and tracks your progress daily toward your financial goals. So linking accounts is the best way to do it. The second best way is where you would add your account. And I'm going to do that. Add account means manually add it. I'm going to do that right now to show you how that works. So you had add account, and let's start with a bank account. So if you had a checking account perhaps, or a savings, I'll even say savings, and they had $15,000 in a savings account. The owner of that, it's jointly held between the two of them, and then included in the financial plan. I'm going to, for today's purpose, just say yes, it is. There's good and bad to doing that, but for the most part, we're going to say yes, it's included in the plan. And then you would go in and add all your various other investment accounts. So if Steve, by any chance, like we talked about, had a 401k, we would add Steve's 401k. And let's pretend that Steve had $425,000 in his 401k. It's owned by Steve. You can keep this managed or not button. That's not really that relevant for today. And included in the plan, in the analysis, you'd say yes, and you'd hit save that. And I'm going to make a couple more just for today's purpose. Sarah with a 401k, and Sarah has, let's say, $310,000. Make sure you change the ownership of who owns the asset, whose name is on it. This one is Sarah. And let's say they also have a couple Roth IRAs. So Steve has a Roth IRA that he started years ago, and as of right now, it is worth $32,000. It's owned by Steve. It's included in the plan. You click save, and let's say one more. There is Sarah Roth. So Roth IRA, and then Sarah saved a little bit better in hers, and she has $47,000 in hers. It's owned by Sarah, and you hit save. You can add anything you want into here. So if you have a loan, and let's just call it a mortgage. So the owner of this is a joint mortgage. It's included in the analysis. It was originally $187,000. Done in 2018. The interest rate was 3.5%, and let's say they did a 30-year fixed, and right now the balance is $167,000. So they've paid off $20,000 in roughly 3 years. You want to make sure you link it to your house, which we haven't done yet, and I'll show you how to do that. And then you'd hit save, and it would calculate what your minimum payment is. This is where it gets a little bit tricky. So once you tell the software here, here's how much I started with, here's the loan term, and here's the interest rate, it'll tell you your payment. Some people might say, you know what, Justin, but I'm putting extra. I'm actually paying $1,000 a month, and they tell me to pay $840. That's where you'd put the extra payment in there. Anything you're putting on top of your normal principal and interest. Okay, so you'd hit save there. You would go to property here, and if you owned a home, you would say, yep, this is my primary home. It's owned jointly. We bought it for $225 in, let's say, purchase year. We bought this in 2005 for $225, and right now it's worth $375. It appreciates that. I just tell people put it at 1 or 0, very low. Property tax $4,000. Insurance, again, I'm making these numbers up, but I just want to show you exactly how this works. Maintenance on the house, I'm just going to make that up, $1,500 a year. It's located in the state of Michigan where you live, and then hit save. What you would do then is go back to your loan and link it to your house so they know it's tied to that. So whatever you end up doing with that house will have an effect on this loan. You can go in and add anything you want in here. So you would add any insurance policies you might have, term life insurance, group term you have through work, any other life insurance policies you have. And I'm not going to go through all of these, and it's pretty self-explanatory how to do so, but I recommend adding these into here because when we're analyzing your entire financial situation, we want to make sure we have all the data we need. So there might be a couple more in here, but for today's purposes, I think I've shown you what you need and how to go do that. Then you would go to the next. And this is the one that most people end up not doing too well on. It's the living expenses. Most people underestimate a little bit how much they spend, but this is on a month-to-month basis how much money you spend, not including anything, your mortgage, debt, or any other insurance payments, because those would have been already entered into your net worth. So anything that we showed before that you spent doesn't get calculated here. So this would be going out to eat, car loans, anything you might have added already or not added up there. So there's two ways to do it. You might say, you know what, I'm just going to go off my bank statements, what's coming in, what's going out, and I'll say I spend $5,500 per month. And let's say that for Steve and Sarah. Or if you said, you know what, I want to go through a detailed worksheet, and this is what I recommend for most people to do, to look at their credit card, their bank account statements, and see how much they're spending in each one of these categories. That way, that I think gives you the most detailed, the most accurate amount when you enter your expenses. And I'll show you why here in a minute, why that's important. I'm also going to have other videos on these other topics a little bit more in detail, and I'll explain that here in a minute. But let's say for today's purpose, Steve and Sarah know exactly what per month they spend, which is $5,500, and they hit save. You can also add any other expenses you might have, medical expenses, alimony, if you pay extra on any other debt you might have, credit cards or so on, or any other expenses. For today's purposes, they spend $5,500, and their tax is filing joint. A few people here and there might file head of household. I have married couples that might file separately. If you did that, you want to make sure we know that in here. And then last, what are your financial goals? And this is probably the most important, but gets overlooked the most. The first one is, what age do you want to retire? And that's number one, because for the most part, everybody is going to retire, has a retirement goal. And everybody's is different, but everybody has a goal. And let's pretend for today, Steve said, you know what, I want to retire when I'm 64. And Sarah said she wanted to retire when she was 63. So you got to make sure you hit that save button every time, because if you just click out of it, it will not save it. So you want to make sure you hit save. And then your retirement expenses. A lot of people just peruse over this and don't put anything in there because they saw the expenses over here. This is now that when you are retired, what will your monthly expense be? I tell people, try to keep that expense to as close as you're spending right now. A lot of people have this preconceived notion that once they retire, they're going to spend a lot less in retirement. And then it turns out that's just not the case. They find other things to do. They might take a few more vacations. They end up doing pretty much the same things they did when they were working. Their expenses might go down slightly, but not exponentially. So I tell people for doing your financial plan, try to keep that number as close, if not the same, to the current expenses you have while working. So you hit save. Now I'm going to come back to these two sections here. The other goal, if you have children that are minors, the system assumes that you are going to want to help pay for college. You could do one of two things. And I'm going to pick on Scott. And you might say, you know what? Scott is not going to go to college, and you would simply delete that college goal. You might say, yes, I'm going to pay for Scott's college as much as I can, and Justin, give me the numbers on a 4-year in-state on-campus program. You, from the pull down here, can pick any number of choices on the data. So you might say, you know what, my child wants to go out of state. So if they lived in Michigan and they said, you know what, they want to go to Indiana, or they want to go down to, Arizona State where it's nice and warm, they would say 4-year out of state, and it would give you the national average of a 4-year out of state school. You can actually say the 4-year in-state, a nonprofit, a master's, whatever you want to see the numbers for, you could put that in here. Let's pick public 4-year in-state. You can actually say the national average, or you can pick a school. So you can actually look up the college, and I would just say, because I live right close to it, Oakland University, and it would click Oakland University, and it would tell you what the annual amount is. You could pick in-state, out-of-state. So there's a lot of different ways to do that. Another way to do it is you could actually just pick a specific dollar amount. If you wanted to do that, you can pick your scholarship money, whatever you wanted to do it. Public, 2-year, again, any which way you want to do it, a customized amount is where you would just put. So if you said, you know what, for Scott, we told each of our children we're going to give them $5,000 a year for school, and that's it, you would save that in there. So a lot of different ways to skin a cat on that. That one is not that important because in dealing with the college goal, we have ability to change and have some flexibility, but that's important for me to understand. What are your thoughts around saving and helping towards college or university costs for your children? So again, any other goal you wanted to add in here, whether that was I want to plan for a wedding in a few years, I want to buy a new property, I want to keep a certain amount of cash reserve for Scott and the savers here, they have 15,000. They might say, you know what, we want to try to get up to 25. So we'd have a cash reserve goal. Want to start gifting money away. Again, any number of goals you have, you could actually put that in here, and that would be something we'd work towards. But if after you've entered all your data in each one of these areas and you're happy with it, then you would hit complete. And then it would take it to your home page. So then from now on, when you logged in, you'd get this page that shows on the left-hand side a list of all your assets, liabilities, insurance policies, anything other that you might have. And you can actually go in and change them at that point. If you forgot something, you can hit add. You can actually go back and change any of the things that we just went through. So if you said, oh, you know what, I forgot that I do get a $5,000 bonus at the end of the year, you would add it either to Steve or Sarah's, whoever got the bonus. You maybe add that in there. But once you have all the information entered accurately, then these tabs are what give you the data based on what you entered here. So let's go to the dashboard. And that's the only one I'm really going to spend some time on today. Is this would tell you your net worth. And that is a number that I look at and I talk about with clients most frequently is what is your net worth number? Because net worth gives you your bottom line flexibility. You can have a ton of assets, but if you have a ton of liabilities, it doesn't really mean much to you. It might help, but it might not help you in achieving your financial goals, because with a lot of liabilities comes a lot of liability payments potentially. So again, most people when they log in will look at this screen and say, okay, here are my assets, here are my liabilities, here's my net worth. You can go in a little bit more detail. Okay, what asset is held in each person's name for your bottom line net worth in each person in total. This is what most people look. If you link your accounts up, this will change on a day-to-day basis. If you just manually put them in like I did, it would stick in one spot, and that's why, or one value, and that's why I tell people to link it up, because that gives me data on a day-to-day basis on where you stand. And then if you've had this open for quite a while, you can actually track it over time, your historical net worth, based on how far back you've had it, which is a very neat feature, because that way you can monitor your progress. So up top here, in each one of these areas, each one of these pull down menus, you're going to have different subsections. So on your dashboard, if you had you want to know your liquidity or want to know your budget, if you had any other debt, it would go into detail on that, and you'd be able to see that. Okay, if I keep paying my mortgage, that extra money, how quickly is that going to be paid off? Might be a recommendation to pay more on your mortgage, and we could see what that would look like if we started to pay extra on your mortgage. That would go down a little bit faster. But each one of these tabs is going to have data on each one of the areas of your financial situation. And this is what I'm going to go and have different tutorials on each one of these, because that's too much to go into today. But each one of these will spit out different data and tell you how far away you are from your financial goals. What is your progress? And that's what I have right here. So this just will tell you quickly, based on what the information you put in, how, versus the proposed versus your current, how on track are you to reach your financial goals. A lot of different data in here. Again, for today's purpose, I'm not going to go into it. There's just two other things that I want to go into. One is that I recommend for most people, if you click on these three dots over here, you get a vault. And this is where I tell most people, if you go back and you're entering information and you don't exactly know what information to enter, just go ahead and put it in the vault. So if you're looking at your pay stub perhaps and you go, boy, I'm not exactly sure how much I'm spending in each one of these areas, or I'm not sure how much I'm saving, put it into the vault. Excuse me. If you're looking at your tax return, you might say, you know what, I'm just going to put my tax return in the vault. This is where we share data back and forth to be able to put this into the financial analysis. The vault is the number one area when people tell me they're having trouble with things. I just say, hey, put it in the vault and we'll deal with it later. And then you can actually create a private folder for yourself. So if you said, there's just things I want to save for myself, everybody has their own private folder. Your advisor doesn't have access to it. It's simply for you if you wanted to put something in here, so you could track it later. Okay. So that is the gist of your RightCapital account. That's how you enter your information. That's how I look at it. And I want to make sure that we have the most accurate information as possible in order to spit out the best results for your financial analysis, the most accurate numbers to your financial situation. Again, I'm going to go in greater detail in future videos on each one of these areas and how to navigate and how to spit out some of the data. I hope you like what I put out today. I'm going to put out a lot more videos in the future on each one of these areas. Please feel free to hit like and subscribe to this. If you have any other questions on this, our contact information is below. Please give us a call, shoot us an email, and we look forward to seeing you in the future, and I hope to hear from you soon. Have a great day.